How big a blow is what's going on in China at the moment to risk assets?
It seems clear that the whole reopening process post-COVID will be, a kind of an elongated, gradual, incremental, step-by-step process. And that's clear from the way the infections, the daily infections moved up. It seems clear that the administration in China wants to support the economy. It is not only apparent from the 20 steps that they undertook to sort of move out of the zero-COVID strategy a couple of weeks ago, but also from the recent triple R cut that we have seen. Even though the incremental impact of these monetary policy adjustments is sort of getting more muted as we progress, it seems that a more concerted effort combining both fiscal and monetary stimulus is possibly necessary, in particular to stimulate domestic demand. So we're watching this policy space very closely. For the time being, it seems that the outperformance that we have seen in the Greater China region could be capped in the very near term.
How do you position at a time like this, particularly as it feels like a lot of strategists are almost too fearful to have much conviction going into next year? Is next year just going to be another year where you have to stay a bit more agile?
For the first half of next year, certainly. We think that the developed economies are clearly going into a recession. The Eurozone is already in recession. US, on our economists' estimate, would be in recession over Q2, Q3. I think the equity markets, particularly the emerging market universe, would possibly suffer not only from declining domestic demand in the developed economies, but also from continued quantitative tightening that the Fed is likely to engage in. We think that despite the likelihood of a downshift in Fed rate hikes to 50 basis points in December, the terminal rate is still likely to be about 5.25% reached in first quarter. So when I put together all this, the uncertainties surrounding emerging market financial assets and emerging market currencies in particular is likely to continue in the first quarter of next year, possibly till the middle of the second quarter. And that would imply that, what you said just now, that is focusing on volatility, being very careful and nimble-footed, would be the order of the day till in the first half of next year.
And yet you're overweight India and IT. Why? Because this is a sector that, of course, has seen a lot of volatility. And with, as you say, developed markets potentially headed into a recession, it would not benefit.
I think Indian IT is being equated by the investor base with the North Asian tech hardware manufacturers, and we don't necessarily agree with that conclusion. We think the order inflows that have come towards the frontline large-cap Indian IT companies, they're relatively long-term in nature, which gives a certain degree of visibility about their revenue streams over the next 1 to 1.5 years. So that's one of the reasons why we're more positive on Indian IT compared to the North Asian tech hardware universe.
And yet we have seen recently the likes of Goldman Sachs, not to mention SocGen and Jefferies, also talk about potentially an inflection point where you have more attractiveness not only from Southeast Asia, but also veering towards Northeast Asia. Has what's happening in China now put a dampener to this call?
I would think partly yes, because I think our own call towards North Asia have been kind of neutral to marginally underweight. That's been the case for much of this year. We have had an overweight on India, Indonesia, Thailand, and Hong Kong, the latter based on the reopening theme. And we have had a neutral on China and Korea and underweight on Taiwan. I think at some point of time, given the very cheap valuations in North Asia, that universe would begin to outperform. It would begin to bottom out and eventually re-rate. We have to watch the China policy space and also the United States, the US, and other developed market demand environment to get a clear handle on that. Of course, it's clear that once North Asia begins to re-rate, the outperformance importance of South Asia and India would possibly cease, at least in the near term. And one has to be very cautious, very nimble-footed in making that switch.
Manishi, at what point do you start seeing opportunities in tech, particularly China tech?
I think very selectively, opportunities have already emerged there. When you look at, I'm not talking about the internet universe. I think some of the internet and e-commerce companies are really cheap now. So, they have possibly bottomed out about 3 weeks to 1 month earlier. I think as far as the China policy space is concerned, opportunities are emerging in the tech hardware universe as well. One has to be watchful about the US policy regarding Chinese tech on that front. But broadly, if I combine these two together, Chinese tech hardware and also the internet and e-commerce companies, and in the latter, because of the cheap valuations and relatively assured growth, then we do have a positive combination within the Chinese silo that investors can rely on.